Successful Minds with Patricia Barnowski-Schneider, the show that takes you around the world to share interviews with some of the most successful and relevant people on the planet. Hear their stories and get the most important business lessons they have learned on their road to success and get exclusive advice on how to implement their success into your life and business. Successful Minds with Patricia Barnowski-Schneider is brought to you by the Strategic Advisor Board and your host, Patricia Barnowski-Schneider.
Hey, are you looking to scale your business from 5 figures to 6 figures or 6 figures to 7 figures? If you are, I have the perfect thing for you. What I want you to do today is I want you to go download a book. This book is going to take you through my 3-pillar system. It's 100% free. All you have to do is go to growfast.cash. I say again, go to growfast.cash and you're going to be able to download my free international best-selling book, which is called Be Good, Be Brief, Be Gone. You can take that book. It's going to help you scale your business to the next level. Again, go download it. Be good, be brief, be gone. Growfast.cash. I say again, growfast.cash. Enjoy.
Hello and welcome back to Successful Minds. I'm your host, Patty Baranowski-Schneider. Today I'm joined by Ryan Twomey, former finance professional turned real estate investor with ownership of over 500 units, and he's a co-founder of TR Capital Partners. So welcome, Ryan. Tell us a little bit about yourself.
Yeah, thanks for being here. You kind of summed it up. So I'm Ryan Twomey, the co-founder of TR Capital Partners, which is a real estate investment firm that provides investors with all the benefits of real estate investing that it has to offer as a wealth building vehicle without the hassles of being a landlord and dealing with tenants, toilets, and the maintenance calls that everybody does not want to partake in.
Yeah, it's funny because I know a lot of people who, I guess with COVID, they all wanted to do these like Airbnbs and blah, blah, blah. And I'm kind of like, I've seen some people that like trash some of these places and I'm like, yeah, sure you want to be that guy, but yeah, I hear you. Better you handle all the finance part and they just sit back and reap the rewards without having to deal with the mundane nonsense.
Yeah, we've all heard those horror stories, and it's not a matter of if they're going to happen. It's a matter of when and if you want to deal with it, really, is what it comes down to.
Yeah, it's definitely no joke. Now tell us, you've successfully transitioned from a finance professional to a real estate investor. So what inspired you to make the shift and how do you navigate the challenges of starting your own business?
Yeah, so going back, I've always been a very analytical person that's been interested in different types of investments and wealth building in general since I was younger. Nice. And so right after college, I started my career in financial services, dealing with mostly financial planning, retirement, fixed income products, insurance, etc., in a one-on-one capacity, working with clients across various levels of wealth. And one thing I would do is study the financial strategies of my high net worth and ultra high net worth clients to see what they're doing differently than the average Joe. Nice. I grew up in a middle class family, so that's really all I knew. So I was studying these people went a long way for me, and I think it will for a lot of people. But the most common trend I found among all of the highest net worth individuals that I dealt with was they all had real estate in their portfolio that provided them with some sort of passive income, tax benefits, and equity. And so this initially piqued my interest, but I didn't really take action until about 2 years later, which was right about when COVID started. And during COVID, I immersed myself in, books on business, financing, investing, real estate, you name it. And one of the most impactful books for me, which is the case for most real estate investors, it was Rich Dad, Poor Dad. And what the book did for me was it outlined exactly what I was seeing when I looked deeper into my clients' financial plans and how their money was flowing. And the action part came shortly thereafter when one of my closest friends actually asked me if I want to get an apartment together. And my response was how we figured out how to buy our own multifamily property, become the landlords, and live for free. And he's my business partner today. He started with me at the very beginning, and we're continuing to grow now. But after teaching him what I'd already known from, kind of dialing in my education, and we, learned more together, created a plan, and then we were off to the races and began buying small multifamily properties like triplexes, duplexes, and eventually scaling up to create our business, TR Capital Partners, where we now have ownership in over 500 rental units with a focus on large commercial buildings, 30 to 200 units in size now.
Wow, that's amazing. I mean, yeah, it's one of these things that you hear other people say, oh, you buy this property, you live for free, blah, blah, blah. And it's all like, it sounds awesome, but people wouldn't have a clue where, how to even go about doing that. Or even the buy this beat up old home, fix it up and sell. Again, it's all sounds great. It's like I wouldn't even have a clue where to get in. So having someone who obviously, this was your passion and you like dived into it or dove into it, whatever the correct word is, and studied it all and you know can guide people along the way. I mean, that's a huge thing because you've obviously proven the success on it over and over again, which is awesome.
Yeah, I think a lot of I mean, you learn from action mostly.
Yeah.
Obviously, you can read and listen to podcasts and do all that
Yeah.
stuff, which is great because that will give you the inspiration or like the action, the ability to take action. But when you're
Right.
actually doing it, I didn't know what I was doing either at first. I went in, we sponsored the renovations off YouTube. We had
Okay.
friends and family come over and help us
Okay.
renovate. Thankfully, they could because it was during COVID, so people had free time.
Right.
But yeah, I mean, at the beginning, nothing's going to be perfect. You're not going to know
Right.
where you can start. So
Okay.
taking action is the biggest step, and then kind of adapting from there is
Right.
really, really where the growth comes.
But it's important that you've actually been there, done that, because
Exactly.
everybody could read a book, but it doesn't tell you real life. Like everything will say, okay, do A, B, and C, but you could say, yeah, but did you? I never even thought that this would happen. So you need to be prepared for that. Be like, wow. So now I could learn from you because you've, actually done it yourself. So that's great.
Exactly.
Yeah.
Yeah, the experience helps a lot for sure.
Yeah. Now you have ownership in over 500 units, TR Capital Partners. So can you share the strategies that you use to scale your real estate portfolio so quickly?
Yeah. So, I mean, after starting small with those triplexes, duplexes,
Right.
we quickly realized that it's really tough to scale when you're having to save up for a down payment in order to
Right.
buy the next property, especially when at this time, as you probably remember, things were kind of crazy and people were overbidding on small properties and single families well beyond what they were worth.
Right.
So we had to take a step back and pivoted our plan. And knowing people that owned thousands of units, we knew there was a better way to do it. So we pretty much put four critical steps into place to scale our portfolio and continue to use them now to keep doing so.
Right.
And they're not, extravagant. They're pretty simple, and it's networking relentlessly to build strong relationships.
Right.
They're really everything in real estate and business in general, and that's where a lot of our best opportunities have come from.
Yeah.
We leverage capital partnerships, bringing in friends, family, and other investors for all of our deals now. And we continue to learn with a singular focus, ensuring that we're going deep, not wide in our approach. So we want to be
Okay.
great at one thing, not good at or average at a bunch of things.
Right.
And then from there, we just repeat the process. Now, a lot of things go on behind the scenes to, actually do those things, but that's kind of like the high level approach that we take.
Yeah, I agree 100%. Focus on the small amount, be perfect at that instead of, because everybody could say, well, I do this. Yeah, but then you're all over the place. You want to be good at one thing. So I think that's a great approach. So now you mentioned that you help people benefit from real estate without the hassle of being a landlord. So how does your approach differ from traditional property management?
Yes. So typically when people think about real estate and investing in general, and this is the same way I thought back when I first started, there's an instant correlation to being a landlord, dealing with tenants, evictions, all the bad horror stories we just talked about that we've all heard at one point or another. And I can tell you firsthand that being a landlord and self-managing a small portfolio does have, its annoying times. It can be as bad as you think.
Right.
So it's not a matter of if, it's a matter of when and how willing you are to take care of those and how big those problems actually become.
Right.
So knowing that this deters so many people from investing in real estate in the first place, even though they know it's one of the most powerful wealth building tools out there.
Right.
That's why we started our business to provide people with the benefits like passive income, equity growth, and tax benefits without having to deal with all the annoying stuff. So we do this through an alternative investment vehicle known as a real estate syndication. Now, in a syndication, there are two main parties, the general partners or the GPs, which is myself and my team, who does everything from finding the best opportunities, negotiating with the seller, securing financing, creating a business plan, and then managing the property. And we do all of this on behalf of the limited partners or the LPs,
Right.
who are investors that are simply looking to invest and grow their capital without doing all of that work and dealing with tenants and evictions and maintenance costs, stuff like that.
Smart
So
people.
yeah, right. So most people. So the LPs are completely passive in that respect and rely on us as the GP team to execute on their behalf. And most people choose to invest this way because they either don't have the time,
Right.
expertise, or the desire to actively find and manage these properties themselves.
Yeah, I mean, that's a great approach because it is true. You have, you always tell people stay in your lane. I have the money. I just want it to grow. You know, the real estate here. Let's just meet. You do your thing. I'll do my thing. And it, good recipe. So I think it's great.
And we work a lot with like salespeople or high net worth people that obviously the calendars are packed with actual high income earning meetings or like tasks, whatever it might be. So what it makes it better for them to invest this way, so they're not taking away from stuff that's actually making them active income, the money they need, while also obviously giving them the other benefits as well that comes with real estate. So they get their time back, but they can also still participate in the investment side of this asset class.
Right. I think it's a great idea. Now tell us, mindset, it plays a crucial role in your success. So how do you cultivate the mindset needed to leave the corporate world and thrive as an entrepreneur?
Yeah, so over the years, I've learned that mindset is pretty much everything, especially for someone who runs a business, but also for anyone in their day-to-day life. Now, I realized that the potential for growth was pretty limited in the traditional 9 to 5 role. So I chose to surround myself with mentors and like-minded people who have already made the leap and done what I want to do, which helped me kind of shift my perspective on risk and thinking it more in abundance and opportunity. So thinking bigger, but also consistently setting small, achievable goals to build up your momentum further enhances your confidence and your competence in the process, which then allowed me to put myself in a lot more uncomfortable situations to continue to grow. And ultimately, it really came down to embracing the idea that calculated risks were very necessary to achieve the success that I wanted to. So that's kind of the steps that I took as far as shifting from more of a limited mindset to, thinking that in larger opportunities and just mapping out a plan to achieve them from there, really.
Looking to grow your business beyond 5 figures, 6 figures, 7 figures plus, what I want you to do is go download this book. The title is called Be Good, Be Brief, Be Gone. It will help you grow your business past 5, 6, and 7 figure. Go download the book today, growfast.cash. I say again, growfast.cash. And download the book for absolutely free.
Oh, I think that's awesome. And having a mentor is like a huge thing, because back in the day, that wasn't really a thing. And most people had to just figure it out, and a lot of trial and error and whatnot. But I like that people now, like, in a way, it's kind of, I try to mentor a lot of people because I didn't have it and I wished I did. So it's kind of like knowing people in the space who can guide you in a sense, or tell you what you're doing is flat out BS. Don't do it that way. Here's what, you need that reality check. And I think it's a huge thing. And, obviously it's working. So
yeah, that's one of the best, the most things that catalyzed my growth was definitely learning from someone who's been there and done that, and not reinventing the wheel, but learning from their failures as well. So I didn't have to, have those setbacks along the way. And now I can learn my own failures, which I can apply and help other people with as well.
Yeah, that's awesome. You take little pieces and make it your own.
Exactly.
Yeah. So now, what advice would you give to someone who's stuck in a traditional career but wants to explore opportunities in real estate investing?
Yeah. So as someone myself who started investing while I was working a full-time job, my first piece of advice would be to figure out how much time you're willing to commit to it and really outline the goals that you want to achieve, and then create a plan in order to achieve them. When I started out, it was COVID, like I mentioned. So time wasn't a big issue for me, and I didn't have much responsibility outside my job in regard to a family or kids, etc. So time wasn't really a factor. So we can eliminate that one for me. But my goal, however, was to build a portfolio that would provide me enough passive income to pay for my lifestyle and create time freedom for myself.
Right.
Now, after buying a few small properties, I did have the extra income coming in, and that paid for most of my expenses. But the only problem was that it was not passive by any means. And what I mean by that is I was still trading time for money because I was the one managing my small portfolio I had at the time, which directly went against the actual goal I was trying to achieve, which was to have time freedom. So for someone who's stuck in the traditional career, but is looking to invest, I would tell them to educate themselves and explore all of their options before diving in, because you don't know what you don't know. And if your goal is to reclaim your time and, grow your wealth passively, passive investing in syndications may be a better choice for you, as opposed to buying, a triplex or a duplex and doing that yourself, because it is still active and you will be adding time to actually having to manage those properties, the tenants, the maintenance, whatever it might be. Mostly because until you get big enough, it doesn't really make a lot of sense to hire a property manager, because it eats too much into your profits.
Right.
So you're not really even going to see much income, even if you went that route and had a property manager. So it comes down to really what you're looking to do, I think.
Yeah. I mean, it is true. So many people sit back and they're like, I want, I want the six-figure thing, blah, blah, but nobody wants to put in any work to do it. Or if they don't know how, they'll never say they don't know. It just becomes a whole convoluted thing. So I like it. Get a mentor, study, figure out what you want to do. And, don't be afraid. I mean, obviously funds are, important, but you have to, like, lotto, got to be in it to win it. You have to take a chance, so yeah, good stuff. Now, I guess, can you talk about the importance of lifestyle design in your journey and how it's influenced your approach to business and personal growth?
Yeah, I think lifestyle design is actually something that most people don't even think about. And that's because most of our lives we're told what to do.
Yeah.
Go to school, get a job, get married, buy a house, have kids, contribute to a retirement account, and then, 60, 65 years old, you can retire.
You're talking
So
to my mom. Go ahead.
yeah, I mean, my parents as well. That was the traditional path, right? I think with social media and other things like that now, people are changing their views on a lot of that. But if you're on that path, you're probably and you were born, so you're my age or older, you probably feel like you're doing everything right. And depending on how you envision your life, you might be, but that wasn't for me. So again, going back to the goal setting conversation, I think it really comes down to truly figuring out what your goals are and then making the short-term sacrifices to achieve the long-term results. Like I said a minute ago, I wanted time freedom. So pretty much the autonomy to do what I wanted to do with my day on a day-to-day basis. So I would ask myself, what does it look like? What does it take to achieve that? And then began taking action on those items. And I'm still nowhere near where I want to be, but I know that if I focus on those things to stay on the path and adjust accordingly over a long enough period of time, I will get there.
Yes.
So that's kind of where my headspace is right now as far as
Yeah.
lifestyle design.
Yeah, I think it is perfect because again, everybody says I want money, but why? Like, what is it? That's not an answer. You have to really get the big picture. Some people might say, I want to be able to live 6 months here, 6 months there. I want to travel. Then you have a bigger picture to try to incorporate your goals. So yeah, good stuff.
Yeah, I heard a quote. It was like, any why, a strong why can bear almost any how.
Mhm.
So if you can actually outline why you want to do something,
Right.
even the struggles along the way, you'll find a way to get through them, which is that how.
Right. Yeah, good quote. Now, tell us personal finance. It's a key topic that you're passionate about. So, what are some of the most important financial principles you live by, and how do they apply to your real estate ventures?
Yeah, again, I think for the majority, this is something people ignore or kind of just don't want to focus on or don't take the time to educate themselves on. But again, for me, I've always been very analytical. So that's kind of a core thing for me. And some of the most important principles I live by include living below my means, consistently investing in assets that produce cash flow, and then leveraging good debt, an emphasis on good debt to accelerate my wealth growth. In real estate, I can easily apply all three of these principles by ensuring that the properties I invest in are cash flow positive day one. I can leverage debt to acquire larger deals while keeping a margin for safety. And then I can reinvest all of my profits to continue to grow that portfolio. So I prioritize long-term wealth creation over the short-term gains to ensure that each deal or property aligns with my overall goals. And since I've become disciplined with my approach, it's helped me achieve pretty consistent growth with my real estate investments over the past 4 or 5 years.
Nice. I like how you say live below your means because that once people start getting wealthy or seeing the wealth come in, that's when, I mean, I think they did a survey one time about like the lotto winners, how many of them went bankrupt? Because all of a sudden you see this cash flow coming and it's like, I got to buy this, I got to buy. That's not how it works, Yeah, good approach. So now tell us what real estate, it can be unpredictable. So how do you manage risk and ensure consistent returns for your investors?
Yeah, so I would actually counter that by saying real estate. So only certain parts of real estate are unpredictable.
Okay.
So, for example, a few years ago, no one expected interest rates to triple. And since that's an external factor, that decision to increase them was obviously out of our control.
Right.
But there are plenty of ways to combat things like that. So, the risk mitigation side of real estate is one of the reasons I believe it's one of the superior asset classes out there compared to traditional investments like stocks, for example.
Right.
And I'll tell you why. So, for retail investors looking to invest in stocks, you are competing against supercomputers and algorithms and dealing with outdated information and a lot of speculation. And for this reason, it's incredibly hard to mitigate risk compared to real estate investing. Now, with our apartments, we're able to provide consistent returns, often exceeding 18% annually for investors
Nice.
because we're on the inside of the investment, making it easier to boost returns and minimize the potential downsides. So, for example, prior to acquiring a building, a big apartment complex, we'll say, we conduct 30 to 40 to 60 days of thorough due diligence, doing comprehensive research on financials, conditions, demographics, the local economy, etc. There's a huge checklist we follow. And this is all to ensure that the investment has a solid foundation. And then we have the ability to diversify, which is also to our advantage, whether that be across different markets, asset types, or even taking advantage of the economies of scale to diversify across 100 units as opposed to like three, which what I was doing at the beginning in that triplex. And this helps us, minimize the potential losses from localized downturns. And another thing we do with every property is we underwrite very conservatively to make sure that even in the worst conditions, the property will still perform. And lastly, post acquisition, we are extremely active managing the asset, which you can't really do with a stock, we'll say, because you're not actually part of the business. So we manage these similar to how we would operate a business, regularly monitoring operations, income and expenses, and this is all to ensure efficient performance and gives us the ability to take action in response to any underperformance or sudden market changes, kind of like that interest rate, environment that we went through a couple of years ago.
Right. Wow, I think that's awesome. And what's cool is that you can tell you actually have the heart for this. It's not like, I know some brokers, it's just, they don't care. They're just making money. You give them their, they're not checking this. They're not reshuffling portfolios. If the market's doing, they're like, it's stocks. They go up, they go down. You just wait it out. Well, someone who's 65 years old, 75, they don't have that time to wait out. So, but you actually are passionate about this and you are putting in immense due diligence, which I think is amazing and really good for investors. So everybody out there, just saying.
Yeah.
That's mm-hmm.
Yeah, we have a team of people. It's not obviously just me on my team, and everyone has specific roles, and all those roles that they coincide together to create a well-oiled operating machine.
Right.
And a lot of these properties comes down, and really any investment I think really comes down to operations.
Yeah.
You can't really operate your stock portfolio. You can sell and buy and have options, all the other things, but you can't actually be a part of the business. And obviously, we know insider information is illegal.
Yeah.
With real estate and these larger properties, all we have is insider information. We know everything going on with everything, so we can make actual decisions that we have full control over. And that, I think, from a risk mitigation standpoint, makes things a lot easier. Which in my opinion is the reason that I love in real estate so much compared to other investment vehicles.
And that's awesome that you're inside because, like we mentioned before about people it became a big thing. They're buying Airbnbs and, they just set it and forget it and assume that every person who comes and rents there is just going to take meticulous care of it. And that doesn't happen. And the place is trash. Now the money you made, you're just putting it back, but you're not doing that. You're actually involved and you're getting good people and you're maintaining the whole thing, which I think is a huge thing. So, and again, you don't have to the investor doesn't have to deal with the people and the mess and all that stuff. I mean, because you're handling it all. And I mean, your returns speak for themselves, which is awesome. So now tell us, you mentioned self-development as a major interest. So what are some practices or habits that you've adopted that have been critical to your success?
Yeah, so I've learned that self-development is probably one of, or maybe the most important things when it comes to succeeding in any venture, whether in like business or life. And the same core principles pretty much apply across the board, no matter what your goal is, whether that be lose weight, start a business, make or save more money. It all comes down to discipline, in my opinion. And there's pretty much a playbook for everything, and someone has probably already done what you want to do. So seeking that out, whether it's through the podcast, the books, the mentorship, or whatever it might be, and then applying that to your own life and staying disciplined in your approach and day-to-day actions will obviously lead to good habits. And then later, that will bring the results you're looking for in the first place. But a key thing that I will add is to stay patient and persistent with it. So persist through short-term failures because they're going to happen, especially if you're starting a business, but also measure in years or decades, not weeks and months. And don't give up, because things didn't go well or you didn't lose the 20 pounds in a month. It's just not realistic. As much as we see online and social media of these transformation stories, and this guy just made $1 million in this business, it's not an overnight thing, and you don't see behind the scenes that it's not a linear growth. There's peaks and valleys for everybody.
Yeah, I think this is awesome advice, and it is true because I have this conversation sometimes with people where the media. We always tease, it's on Google, it's got to be true. It's not. But I mean, what happens for one doesn't mean it happens for everybody. You might be that one lucky person who just turned this business around and maybe, but it doesn't normally happen that way. And having the realistic expectations is a huge thing. I think it's important because I know other people, one person I know in particular wanted to lose weight, pretty heavy person. And, they get a gym membership, blah, 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 but didn't lose it in 2 weeks. And now that's it. You didn't put it on in 2 weeks. It's not going to come off in 2 weeks. But, having realistic expectations and knowing that it's a long-term goal, because you could be 25 and you want to be rich tomorrow, but don't you want to retire? Like, have this long-term goal. I think your advice is awesome.
Yeah, I think a lot of it comes down to how you can tell a lot by someone's goals by how long they're measuring them on, right?
Yeah.
So if someone's thinking and talking in years and decades, that they're probably going to they're the long-term growth path, as opposed to someone who's saying, this is going to happen this week or this month or whatever it might be. So that can tell you a lot right there by the way you're speaking about your goals in general.
Yeah, even with stocks in general, if you get some broker says, "Oh yeah, guarantee you, 300%," it doesn't happen that way. And even if it did, they don't tell you that you could potentially lose that all next week too. It just doesn't work that way. You have to have a plan and put it into action.
Mm-hmm.
Yeah. So talking about a plan, looking ahead, what are your goals for TR Capital Partners, and how do you see the real estate market evolving in the coming years?
Yeah, so right now we're heavily focused on acquiring 1,000 units over the next 3 years or so in Springfield, Massachusetts, which is where I'm from Massachusetts, with a focus on value-add multifamily properties, meaning something we can just pump value into through renovations and things like that. And we want to take advantage of the need for workforce and subsidized housing, so mostly affordable housing focus.
Wow.
Yeah, I mean, we've already started purchasing a lot of properties in that market and have a strong hyper-local relationship with the local government, property management, as well as I mentioned, like our amazing team we put together in order to keep pushing towards that goal.
Right.
But with that, we also look to continue, obviously, to help investors get the benefits of real estate without the hassle of being a landlord and continuing to provide those 18 to 20% returns annually, while also helping build a strong community in the Springfield area. So it's almost like a win-win right there. As for the real estate market itself, in regard to interest rates and economic conditions, rates are expected to drop, which will hopefully allow for cheaper debt options for us and the potential for enhanced cash flow on the properties. And as I'm sure you've heard, as well as many listeners have heard, there's a strong fear that we are in or will be in a deep recession in the near future. So with that in mind, I think you'll see a lot of investor capital move out of those traditional investments like stocks and stuff that we talked about earlier into real estate and more tangible assets, because they're the most recession-proof asset classes out there for a number of reasons. However, another thing I will say is oftentimes we hear about, this big real estate market and the ups and downs, but what does that even mean? Right. So real estate is a hyper local type of investment, and each city and surrounding areas can be viewed as their own markets. So I think it's very important to, know that every market will experience different rates of growth depending on a few various local factors. And talking about it on a national level, yes, there's economic indicators out there that you want to follow, but it's really important to be hyper local when you're picking a property or a market or, type of investment that you're going after, because real estate's more so in your backyard, not so much on a national level.
Awesome. Good stuff. I mean, anything else you want to add that we didn't already touch on? You want to talk about anything?
No, that's really it. I mean, like I said, I think it starts a lot of this with education. When I first started, all I knew was become a landlord, buy, a couple of properties, save a bit of money, do all this. There's a better way to do it. I think we've found that way, especially for someone who doesn't have the time, the desire, expertise, or just, wants to invest passively and collect that passive income. We call it mailbox money. It's nice when you can get a direct deposit every month, right? So,
and I think it's awesome. I mean, you've definitely proven this. And I mean, people could say, oh, well, it hasn't been that long. I mean, the fact that you've scaled it this fast, I mean, you've got a lot going on, and you know your stuff, which I think is awesome. And your investors obviously are very happy, So, I mean, just need more coming in, and you can grow more properties. I think it's awesome.
We're not the first ones to do this either. Obviously, I learned from other people that were successful in the space. So, I mean, whether it's you're looking to invest this way with us or someone else, I would say first, make sure that you have a know, like, and trust factor behind who you're investing with, because you are relying on that GP team to execute on your behalf.
Right.
So you want to make sure that they have a track record. You want to make sure that, they're honest, great, good people. You can think of it more of as a partnership, because these properties are being held for, 5-7 years in some cases.
Right.
So it's not it's not transactional. It's going to be, you're going to be talking to them quite a bit. We send monthly updates. We have quarterly calls with investors. We make sure that we're on top of everything, and we're creating relationships with people. It's not a transactional thing where you're parking your money and walking away. It is in the sense that it's passive and you're growing your wealth that way. But whether it's with us or someone else, if you're looking to invest this way, definitely make sure you know the person that you're investing with and their experience in the space.
Awesome stuff. Now, I mean, obviously people, they don't have to be local to you to invest in any of this, right? I mean, how do people, and how do people learn more about you and get in touch with you?
Yeah, so I'm big on LinkedIn. That's kind of where I do a lot of my, talking to people and developing those conversations and relationships. So you can find me, it's Ryan Twomey on LinkedIn, trcapitalpartners.com, or shoot me an email at ryan@trcapitalpartner.com. Happy to schedule some time to connect and go over any questions anyone has and kind of talk about where we're seeing opportunity in the market and how we work with investors on a one-on-one basis to help them achieve what they're looking to achieve. So
awesome. Well, thank you again for being on the show. Again, that was Ryan Twomey. So thanks for listening to Successful Minds with Patty B. Never miss an episode by subscribing. So thank you so much again.
Hey, we all want to scale our business. Hey, I have the answer for you today to help you do that. If you're looking to scale from 5, 6, even 7 figures and beyond, book called Be Good, Be Brief, Be Gone. I'm going to give it to you for free. All you have to do is type in growfast.cash. I say again, growfast.cash, and you can download the book for absolutely free. I hope the book helps you this year. Take your business to the next level. Again, go grab the book, growfast.cash. I say again, growfast.cash. I wish you the best and grow, scale, and win.
Thank you for listening to Successful Minds with your host, Patricia Barnowski-Schneider. Please leave your feedback and visit strategicadvisorboard.com to get the latest and greatest business advisement on the planet. Follow us on social media for updates, and we'll see you on the next episode.
There it is. Magnum. Holy moly.
Yeah, baby! That's what I've been waiting for!
Dear God. It's beautiful.